Zhu Min, thank you very much for joining us.
Thank you.
First off, what is your view, what is your outlook for global growth, given the concerns about the yield inversion, the weak data? How do you see things playing out?
Well, global growth rate is slowing down, right? Last year is 3.7. This year is roughly around 3.5, 3.4. Next year will continue to slow down. I think we have to understand, number one, that after financial crisis in the past 10 years, the growth rate in average is below the before crisis growth rates, where we are in a moderate growth environment. And the 2018 growth is the peak. So then we're gradually coming down. Coming down in the U.S. and also China-U.S., particularly Japan. So I think that's the big picture. But it's just a slowdown. I don't think will lead to the recession at this moment. On all the sides, in the U.S. side, in China side, I think there's still the parts of economic growth are still quite solid. So that's the picture for the world.
We saw, of course, the data today out of China in terms of industrial profits, down 14%, the weakest number since 2009. Of course, that has an impact on investment, on aggregate demand. Does it seem to you that policymakers here will have to inject additional stimulus?
I don't think policymakers need just additional stimulus because their policy is quite strong there already. It just take time, right, to see the impact. It's a $2 trillion, tax cut. It will take some time. Gradually, we'll see the impact in the second quarter and the third quarter, basically, and move into the fourth quarter, a little bit of next year. I think that's very strong. And also, if you're looking for the budget, it's almost a 2 trillion RMB for the Social Security support. So they will also support on the consumption. Money moved to Social Security, went to the pension, immediately go to the market, right? So, and those are quite strong. And also, there are infrastructure investments issues. And with both fiscal monetary policy from neutral to a little bit of easy, still stand on neutral. So I think the policy is there. It should take some time. If you're looking for all the parts, are still quite solid. So I'm very much looking forward to see the growth pick it up in the third quarter and the fourth quarter a little longer easy. But overall growth is still made a little bit of a slower than last year. I think that's because of the structure change, because continue we're putting on deleveraging as a top task on our thing. When you have deleveraging, you have a structure reform, obviously growth will slow down. But it's pretty solid.
Does that suggest then that you don't see that there is a possibility, or at least a likelihood, of a benchmark rate cut by the PBOC this year?
It's unlikely, yeah. We still have a 12% on the reserve rates, right? If you still have a little bit of room to cut, this is way high. So before you use up all your rooms and in the reserve rates, and I don't think that's a risk cut in the interest rates.
If we get a trade deal that doesn't see the removal of all the tariffs, will it still have a material impact on the prospects for China's economy in terms of a supportive impact?
You mentioned, quietly one thing, the tariff issue. I think that's a very important issue. We very much hope we'll have a trade deal. I think both sides are working extremely hard, right? We finished the 6 rounds, we get into the 8 rounds and 9 rounds. That's very positive. We're getting on the trade issues, on the market openings, RP protections, SOE neutralities. We really move along also. On the structure issues, 142 issues, we really run quite a lot of this the whole thing. But the one thing is very important, which we should know tariff on the China exports or China import to the United States. I think that's the precondition. We'll start the whole thing, right? If you put these issues still on the table, on the top of the whole thing, I think that would be very difficult for negotiation to move forward.
Do you buy into the argument that the trade war has helped to be a catalyst for reform here?
I don't think so. China, the Chinese way is, yes, there's the trade fractions, external exchange, but we try to do whatever we have to do. So, we continue to reform, to open. And basically, the President Xi Jinping announced opening policy last year here, the 11 key issues, right? It's very much we need. If you're looking for the whole financial sector, still more or less close, right? And the foreign bank shares today is only 1.7%, even lower than 15 years ago. Well, 15 years ago, I project, when China got into WTO, I think after 15 years, foreign share can be 15%. I was completely wrong. And the equity market is less than 2%. So That's very much what we need to be able to generate quality growth.
How significant is the inclusion of Chinese government bonds in the Bloomberg Barclays Bond Index from April 1st?
In theory, they will bring roughly $1 trillion RMB capital flow into the market. But whether they will be able to have that money, it depends on a lot of details, right? I mean, accounting standards, the legal systems, the settlement systems. But I think basically it's a very positive, good news. So Chinese bonds market so far this year has been very good. Our bonds market will continue to be good across the whole year.